If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is April 13th, 2020, and today is Monday morning. So firstly, I want to wish happy holidays to everybody and welcome back from the holidays. We're looking at the economic calendar today. Nothing scheduled, but as the markets are entering a new stage of trading, we're watching the currencies, actually the major currencies, tapering off right now, while the Japanese yen gains versus the US dollar. Now, looking at the Dow Jones, I believe we're entering a new stage of trading. We're going back to the fundamentals, less news-driven, less emotional kind of trading where the markets are just reacting to the news, and we're going to go back to fundamentals, and you'll see in a second why I say that. Now, looking at the commodities, we saw gold sell off a little bit after hitting 1750-ish level. We're challenging that upper limit again. What oil bounces on historic OPEC plus deal, okay, the oil producing countries have come to a deal where they're going to cut production, which means there's going to be less supply and the prices are going to increase, which makes it less of a situation where these oil producing companies are going to lose more money in this kind of environment that we're in. Now, it's also going to affect the deflation of the currencies right now. So there's a lot of things in play right now since the economies around the world are standing still until this situation subsides. Now, lastly, looking at the stocks. Now, this week is going to be one of the reasons I believe we're going to go back to fundamentals, because major stocks are entering quarterly earnings this week. Companies like Google, companies like American Express. So major companies are actually coming with their quarterly earnings and guidance into next quarter. So we're going to have a real sense of what the economy is actually doing. But let's take a look at the charts and see what we can expect from today's trading. So we're going to take a look first at the Euro USD. You could see at a 4-hour chart, pretty much we've flatlined here. Okay, you could see that 109.39-ish level, okay, pretty much in a very tight range. And I expect this to be the case until there's going to be some sort of shift or some sort of rotation in the markets. However, looking at some of the other markets as we're looking, GBP USD also flatlining at 24.70-ish level, also getting a little bit stronger versus the dollar. Aussie dollar gaining a little bit to 63.37. And Canadian dollar actually selling off a little bit here, okay, going back down to 139-ish level. Again, getting stronger against the US dollar. Lastly, looking at the USD, Japanese yen gaining the most versus the US dollar after hitting a high of 109.26. We're back to this 107.89-ish level. Looking at a 4-hour chart, your next real support level is 107.60-ish level. So we have some room on the downside there. Now, jumping into commodities, we're going to look first at gold. You see we had this nice tally up at this 1680, 1700-ish level, but we keep on faltering every time we hit this area. Now, as soon as we break above this 1700-ish level, I believe we can continue further, okay, which will be almost all-time highs in the past, let's say, 7 years. Okay, if we look at a weekly chart, you can give us a perspective. That would definitely bring us back to where we were, looking at a monthly chart, that would bring us back to where we were in 2010, 2011, right before we sold off. Okay, so that would be a major component if that does continue to challenge this upper limit at about 1760. Now, looking at oil, okay, we had this bounce this morning to $24.20. Now, this could be a dead cat bounce, which means that it will go back down to its lows, okay, just because even if they cut production, it means that oil will still be consumed much less in the coming months, okay? And that's going to represent the fact that the markets are not expecting us to come back to work anytime soon, okay? So this thing may linger on for another 5 months, 6 months, 10 months. And remember, the markets hate uncertainty. So the fact that this is not really sustaining itself at $24, going back to $25, means that we may still go back to this $20 a barrel. Might not happen today, but it will considerably correct itself at some point. Now, looking at the Dow Jones, we're trading right now at 23,290. Now, last week, we had a massive week. We traded from 20,680-ish level up to 23,894. That's a 3,000 point rally in a week. Now, this happens often, which means that it happens often. The markets rally right before they sell off. Okay, so this could be just window dressing, as it's called in the markets. Okay, which means like right before the earnings season comes in, They rally the markets to make them look good, so then they'll take them down later. Okay, that has happened before. Now, I'm not celebrating that too fast because it's still sustaining itself at 23,284, and some of the major stocks like the Microsoft, like the Amazon, are still relatively very strong. Okay, they haven't sold off so much. Okay, so the ones that may get affected by this is companies like JP Morgan Chase, okay, which is one company. We're going to take a look at that, which is a major bank in the United States. Okay, so keep an eye on this because this is really going to be the barometer for where we're going. Okay, looking at a daily chart just to give us a perspective, this is the 1, 2, and possibly we'll have a 3. Okay, which means that we'll have that third rally. But I don't want to celebrate that too soon because the second rally wasn't really much of a rally, okay, as we're correcting ourselves right here, over 600 points being sold off in pre-market, okay, so just be aware of that. Now, jumping into the stocks, and I mentioned before, we're major earnings season. Companies like Apple, companies like Amazon, companies like JP Morgan, okay, are going to all release their earnings and their guidance for next quarter, okay, which means by July, they're going to tell you exactly what they expect to have in earnings for July and moving forward, okay? So this could be a scary perspective for everybody as we enter this week. Now, looking at Apple, to say it's strong, it's relatively strong. It's not, it did bounce on the day, but it does look like it's not as strong as something like Amazon, okay, which is trading close to its all-time highs, okay? If we look at a weekly chart, not much of a difference there. If we compare it to Apple and look at a weekly chart, we're still off of our highs by over 60 points, okay? So Apple's not as strong as Amazon for the obvious reason. Amazon items are still being consumed. Amazon's business is not being so affected by it because most of their business is online. Now, looking at some of the other stocks, JP Morgan, okay, trading at 102. So this actually had a nice run up, but the question is whether or not this has hit a snag here at 102 and may correct itself going into the next couple of months. Now, looking at some of the other stocks, the last one to look at is Microsoft, okay, trading at 164. If we look at a daily chart, okay, it did gain back, okay, not as strong as Amazon, but stronger than Apple, okay, but not as weak as JP Morgan, okay? So you got to really gauge each stock if you're going to be trading them for each one and the severity of their strength or the severity of their weakness compared to the larger market, okay? So I think it's going into this week, we're still going to see some volatility, especially going into next week as well, as the markets may still correct themselves. This is Fred Razak. I want to wish everybody a great trading day.